All right, folks, welcome to our daily market recap here. Really a lot of interesting stuff that happened, but before we do that, we're going to go into our GDX trade. I alerted our GDX trade just that we closed it on Twitter and sent out the notification to subscribers, but I want to go through a little bit of what that GDX trade actually looked like. So today what we closed was part of this laddered straddle, and this credit is incorrect. I got to go back and update that credit. But what we saw, we adjusted the straddle. So we originally put on a straddle for over the 33. Let's just bring it up here. Over the 33 call put, so 33.5 call put, probably in this area, somewhere in one of these days. And then we moved it up to 35.5 that put to take in a little bit of extra credit. And we did this for July when we had this major move that was happening up here. I mean, we've seen more than a 100% move here in GDX, but we moved that there to get a total of 751 in credit. And so we wanted to buy that back for 25% or $5.93. And so we were able to buy that back today. And I put that out. Now, this is part of a huge position. So as you can see, we had an initial trade on the 13th of a two-contract trade for 33 cents in credit, this iron condor. We had to adjust it. And then when we blew past during this move up, I went ahead and added a laddered iron condor that we're still in, and we moved that out to December. And I've gotten a total two wide, two contracts, two wide, one wide, and we've taken in a total of 70 cents in credit and a laddered straddle. So we laddered into a variety of positions here. And right now we're at this final trade details where we lost $104 on the initial iron condor trade. We've won $188, and we're looking at about $70 if we get this off. I'm targeting on this laddered adjusted laddered iron condor that we've moved to December, and you know, which is already showing pretty nice return here, already up on this particular position, and we're super wide. 206 days left until expiration, I believe. Yep, 206 days left until expiration. And so what we're really doing here is we're just looking to take this off. We've got a total of 70 cents in credit, so we're looking to take that off at 35 cents. But this is an example, and so if we take that off at 35 cents, add another $70 to this, 84 and 70 is 154. So we're looking at $154 profit on a position that totally blew past our break evens, right? So we had this initial trade 16, 15, 27, 28. So we probably put that position on, I mean, I can actually tell you, on the 13th of May, which was, let's keep going back, on this day. So we added on this day right here, basically pinned the bottom, and we're still going to end up very, very likely making a profit. And even if we take a full loss on that iron condor position for December, we're still actually going to make a profit because we're up $84, and the most we can lose on this position right now is 60. And so we're still going to make a profit on that particular position, and we laddered right here. That just tells you exactly the type of and the beauty of trading this particular system, right? It's how we systematically grow our accounts through you know, trading that is what a lot of folks deem pretty risky and zero sum, right? They anticipate that it's zero sum, and we know that that's just not the case because of our ability to defend positions, ladder positions, and really make some exciting things happen. Okay, so let's go into our SPY trade here. We're going to make this big. I'm going to take off all my watch lists and scratch pads. Okay, let's take a look at this. So this candle right here is wrong. Let's go to the 5-day, 5-minute. That way we can really see what happened today. Okay. Looks like I need to just get rid of... I wonder how far back this goes. Properties started on the 3rd, so this was a gap down. we're going to go ahead and get rid of this gap down because we are all sorts of in the middle of it. Okay, so what we see is we saw actually this 302.26 print right at the open, and then we were really a fader pretty much all day. Had a little bit of movement, but really we faded from this 302 high and really never saw it, never challenged it. You can see really what looks like based on everything that, and I don't do a lot of technical analysis, but we definitely see a triple top here on the daily. We are up, shockingly, we're up $1 after hours. You have the after hours pump that's going to happen really because of our minis. But what we see happen here, close at the low of the day, weak close, you know, but when it comes to our different charts here on the daily, you know, we're above all of the, here's the 9 EMA, we're back above the 50. We are right at the 200. So we have a lot that's happening. This 300 level, I anticipate that we're going to flirt with it for quite a while, and then we're going to move, you know, really hard one direction or the other. We know that that's likely going to be what happens here. But as you can see, we've really just been moving up since this 218 low. I mean, you know, how many people thought that we were going to see this type of a, you know, this type of a position? But you know, this is where we're at, and we're just going to continue to keep, you know, continue to keep looking at things operating here. So we're going to see a pretty major divergence though here in this Qs. I mean, the Qs look really nasty here. I mean, this is a pretty nasty candle. But here's what this looks like, and it actually even finished red on the day, which is interesting. Here's what this looks like. We're moving away, I think, a little bit from kind of that tech euphoria. So the idea that there are tech positions that are good for this stay-at-home, social isolation, social quarantine mentality back into securities like the S&P securities, right? Because we don't see, I mean, we were still up 1.23% and I'm up even more after hours versus being down in tech to securities that are going to look good when we reopen. You know, when we think about the COVID-19 situation, one of the things that we know is that we're going to see more cases, right? This isn't political, but we are going to see more cases. And right now, money's transferring away from tech into securities that look open. So major divergence between our Qs. We see IMW up 3%. I mean, just ridiculous. I mean, you're up almost, what, 40%? No, that can't be right. Sorry, 20%. No. Math is hard sometimes, friends. You know, 1 to 140. That's a 40% increase over this low. You know, just crazy things. You know, 1 to 120 or 2 to 240 would have been 20%. You know, up 3% here, and then again we're gapping a little after hours on this particular position. Gonna probably see similar here in the Dow, and so really what you're seeing is this transition from tech to open securities. I don't think that's going to be a long-term play. You know, I think that we're at some point we're going to see a retraction here in the market, but not yet. Let's take a look at VIX. You can see here the difference between our SPX comparison. We're down now well over half. But in much the same way, we saw an increase throughout the day, right? So increase throughout the day. Let's see what happens as we continue to get closer. You know, my own VIX positions really have all the way up here to that 45 level kind of centered, and then we've got break evens of 60 or so. I think, let's take a look here. I think that my break evens, we're gonna take a look at this particular position. Yep, see, here's the 45 that's above it. Yeah, and we've got all the way out to 61.5 of a long-term break even here. So feeling really solid, 61.5 all the way out here. Feeling really good about that, and we'll just let contango, you know, continue to eventually do its thing again for us. We look at the VIX. We are under 30. Still, for me, not super like long-term bullish, right? I want to get back in our rectangle here. In order for me to be aggressive long-term and put in some of my low volatility strategies, we're outside of this box, and so I'm not really looking for any of my low volatility strategies to go into effect right now. So continuing to still watch for that. UVXY doing the same thing, just decaying. Let's go through some of the other really interesting things that we have. I'm just going to go into my positions. One of the things you're going to see, right, are really all of our securities just doing major moves. So there's EEM, EWZ, huge move, right? 7.83%, and we closed at the low, right? We were up close to 10% at some points. FXI, FXI, another really nice move, but for me, well within my break evens. GDX, we've talked a little bit about GDX already. Well, go back to charts. GDX, gold down. So, when stocks are up like this, you should see that inverse relationship. IWR up 3%. Here, almost 4%. So, seeing a ton of gaps. And we've got a lot of gaps. I mean, you go back through and you're going to see really similar things in all of these. Gap. What do we got? We're going to see a gap. Yep, gap. Huge gap. FXI. Gap. I mean, FXI is one that you're going to see, pretty major gappers. S&P, we've talked about here. Got to fix that candle, which I will certainly do so. TLT. I was actually a little worried about TLT. Certainly don't want to see this level of volatility again. XBI really coming off bearish engulfing candle, major bearish engulfing candle there. XHB, this is another one of these just crazy gappers, right? So gap and gap. XHB, just seeing this up 4%, it's one that I'm struggling with. XHB is really interesting, though, and I'm going to leave this for just a second. So I'll look at the personal trading strategy that we use, and one of the reasons that XHB is so interesting, here we go. So we go here, we maximize this sell. We are also really close to this being a short. Just want a little bit more, right? Give me a little bit more right here. Another 1.3 there. We've got our RSI2. We've got that. This is a total short right here, based on our strategy. First short that we've had since this area right here, which was a great short. So I like this short right here. I want just a little bit more before putting on the short. It looks exactly like our XRT, right? Huge gap up from this gap, right? So many of these look so similar. We got that. I did pull the trigger on this. Even though it wasn't quite there, which means I might pull the trigger on XHB tomorrow and initiate a short position via a spread there. So that is very much kind of in the game. Major market indicators for daily video. Let's go back. So I think one of the things that really represents and the thing that we want to see is so many of our securities had this huge gap, right? Huge gap. And so do I think that it may be legit? Sure. Do I also think that this is a great time to find good chart patterns that show up on things like a watch list right here, my short watch list, right? I am waiting for this short watch list to really hit. There's nothing showing on the long. Nothing. Okay, so we have looks like JNUG and Netflix showing. I don't really want to do that. And I mean that's really a lot of aftermarket moving. It was just a day where a lot of stuff worked, right? But there's the short watch list, and so waiting for some of our ETFs to pop on this PSF short watch list, and then we're gonna really start adding them. I might have been a little early in XRT, but I don't think so, and we're just gonna need to continue to do that. Okay, so that is just kind of looking at the market. A lot of gap up, but we saw kind of some relative weakness throughout the day. We're going to be paying attention to how that weakness really moves into the rest of the week. Shortened week, 3-day week. We're going to try to get a trade on every single day in order to allow us just the ability to continue building out these portfolios and making some money over the course of the next couple of months. Now, if you have any questions, reach out to me at Ryan, RYAN, @sellthatoption. Otherwise, happy trading.